we don't need new rules. What we do need is to have existing rules enforced. The American financial house has a smoke alarm too. It's called the price of gold and the price of silver. When the price of gold and silver go dramatically higher, it warns people and alerts people that the currency is being abused, and people then, it becomes reinforcing unto itself, because that creates a domino effect where people buy more and more metal. It makes the metals price go higher quicker. The founding fathers of America, if they were alive today, I don't believe there's one of them that would be allowed to have a presence on social media. They would all be censured. They would all be deplatformed, and none of them would have a word to say on social media, because Facebook would have them eliminated, YouTube would have them eliminated, Twitter, Instagram. This is the kind of thinking and the kind of thought that is unallowed.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance. We have a returning guest who's always popular with our audience. This is Rob Kirby, a proprietary analyst, and he's joining us this Friday, July 2nd, 2021. Rob, thanks for coming back on.
Pleasure to be with you again, Dunnigan, and happy 4th of July a couple days early.
Well, I don't mind if you call it a 4th of July. I will talk about it a little bit later here, why I get fired up when we talk about it as Independence Day. Oh boy, I'm trying not to boil over myself right now. Okay, here we go. The first thing I'd like to talk with you about, we did, as we always do, calls for viewers' questions prior to your arrival, and they were generous as always. And there's a group of them that I've lumped together here because they all have to do with either price manipulation or Basel-III regulations, and will it have any effect on the gold and silver markets? So I'll just hit these real quick, and then we'll address them together as a group. We have R. Lewis Rogers 777, who says, I'm curious how much longer they, meaning the powers that be, will hold the price down on gold and silver. Will it be going to the moon soon? Let's hope. And do we have precious metals left in government vaults, or is the bank still in control of it now? Second one is Deb Sbo says, what kind of liquidity issues or illiquidity would potentially be coming from the Basel III? And why the silence on the regulations from the mainstream? We have Paul Whiffen saying, what's Rob's view on why Basel III has been a big nothing burger thus far? Douglas Carlson says, now that Basel III regulations are in effect, are there other tactics the BIS can use to suppress the gold and silver price? And Dr. Music Maker asks, does Mr. Kirby think that, quote, they will try to create a new rigging system for silver? All right, so I would like to unleash you on the topic of Basel III and I guess why it's been a big nothing burger thus far and the other ancillary topics.
Well, Basel III is a new rule, and let's just take it as a new rule, and it's the substance of the new rule is basically that banks can no longer keep unallocated precious metals holdings off balance sheet, which is what they've been doing for accounting purposes up until now. So. But I instead of getting into the minutia about what's on balance sheet and what's off balance sheet, I mean, derivatives are off balance sheet items too, and that market is 800 or 900 trillion, depending on who you listen to, in size, and that doesn't seem to curtail or limit banks' activities in our capital markets whatsoever. So my real gripe with this whole topic is that we don't need new rules. What we do need is to have existing rules enforced. You see, we live in a world where regulators look the other way when the U.S. Treasury is engaged in rigging markets. And the precious metals markets are a prime example of how the U.S. Treasury, in particular, through its basically its covert arm called the Exchange Stabilization Fund, how they sell infinite amounts of paper metal through the exchanges as that we know as London Bullion Market Association, or LBMA, and the COMEX, which is New York, the New York market. So they sell infinite amounts of paper to keep the price collared on precious metals. And you see, the reality is there is commodities law that's written that exists today that if enforced by regulators would make this ridiculous price suppression of the metals absolutely impossible. But the reality is regulators look the other way because it's the Exchange Stabilization Fund, which is the U.S. Treasury, that's doing the suppressing. And it's basically the CFTC, Commodities Futures Trading Commission, that has purview over the commodities and implementing commodities law, which has such things as limits on concentration, limits on gross amounts that banks are allowed to hold long or short. But let's just say one arm of the government is never going to out the other arm of the government. And as such, we have a dog's breakfast when it comes to precious metals, where the U.S. Treasury, namely their Exchange Stabilization Fund, can act through the New York Federal Reserve Trading Desk to corral the price of precious metal and keep precious metals prices from exploding higher. And this is done because a rapidly rising price of precious metal has historically been the proverbial canary in the coal mine, signifying monetary abuse and spendthrift government, wasting money, printing money. So if you can imagine, the effect of all this has been, if you think about living in a house, and if you have fire alarms in your house, and if you're asleep at night, and if there's a wisp of smoke downstairs in the living room, the fire alarm goes off, and it awakens you so you can get out of the house before you burn and die in your house. Well, the American financial house has a smoke alarm too. It's called the price of gold and the price of silver. When the price of gold and silver go dramatically higher, it warns people and alerts people that the currency is being abused, and people then, it becomes reinforcing unto itself, because that creates a domino effect where people buy more and more metal. It makes the metals price go higher quicker, and it undermines the integrity of the currency, which is the dollar in this case. And this is exactly what they want to prevent.
I would inject that it undermines confidence in the dollar, because the integrity was already lost before that by the official actions.
Yeah, well, but I mean, and the confidence is disintegrating in the dollar too, because countries like China, countries like Russia, countries like there's many of them in the world, are completely aware that America has disconnected the fire alarms in their financial house, and they can see the smoke, and they can see the flames. But people who get their information from the mainstream financial press, whether it's the Wall Street Journal or CNN or MSNBC, the talking heads, they don't see the smoke, because they're mesmerized by basically by the lies, the mainstream media, who shills for the establishment the same way the CFTC shills for the U.S. Treasury. And, I think there's an old saying, and I think it was the words were uttered by George Carlin years ago. It's a big club, and we aren't in it. So when it comes to Basel-III, Basel-III is nothing but a new rule, and it's a new rule that regulators will ignore and will allow, the people who butter their bread, namely the U.S. Treasury, they'll look the other way and allow banks to skirt this as sure as God made little green apples.
What about that last question about do you think it will be necessary for a new mechanism to become up for rigging the system? Do you think that the old mechanism will work just fine? Thank you.
Well, I mean, looking the other way, I mean, hear no evil, see no evil. If you can't hear it and you can't see it because you're not looking and you're not listening, it doesn't exist. I mean, if a tree falls in a forest and there's no one there to see it, did it make a noise?
Mm-hmm. You mentioned along the way, halfway through this discussion, you talked about the mechanisms and the environment within which those are allowed to be effective. And one of the necessary conditions you mentioned is a blind eye being turned by regulators. Okay, but you also mentioned the firepower of almost unlimited funds. Or you just kind of in passing, you mentioned that you've talked to us several times in the past about the work of Dr. Mark Skidmore. Can you bring us up to date on what the latest is on those potential source of almost unlimited funds?
Well, I mean, the amount of money in existence, and this is where a lot of people who do technical analysis, which in a free market where we had free access to real information, technical analysis makes sense. I knew people back in my institutional trading days. I knew people who were good technical analysis, and they would develop models and did develop models that were very predictive and very accurate in terms of what should fundamentally happen when monetary aggregates and let's just say anything relating to economics, economic data reporting. There was a time when economic data reporting was very accurate. But you see, through the use of something called hedonics, which is, I'm going to call it the corruption of data. I was going to use another word, but corruption will suffice just fine.
Thank you.
But let's just say that years ago, technical analysis kind of sort of worked. And today it doesn't work. And the reason it doesn't work, in my view, is because people are using false inputs. So, I mean, any economic model and any piece of technical analysis has to begin with some baseline assumptions. So in the instance of metals analysis, typically people start with a baseline assumption on how much money there is in existence. And I'm going to suggest to you that the amount of money in existence is probably, if that amount that's reported, and you could probably even make the statement that the generally held view as to how much money there is, liquid money there is in the system, is probably reflective of maybe the Fed's balance sheet. That's one broad measure that's used. But let's just say if the amount of money assumed to be in existence is X, I'm going to suggest to you that the work of Dr. Mark Skidmore would be very supportive of the notion that instead of the amount of money being X, it might be 10, 20, or 30X. And you see, 10, 20, or 30 times X buys a whole lot of love even today. And this is how, and to put this into context as to how grotesque the numbers would be suggestive of, let's just say in the Social Security Trust edifice, under the umbrella of Social Security Trust, the U.S. government has roughly $400 billion in investment retirement assets, investable retirement assets. That $400 billion, and the last year the data was available, which I believe was 2019, according to Dr. Mark Skidmore, using the government's numbers, they had a churn, like an annual turnover of that $400 billion to the tune of more than $44 trillion. You see, that is highly suggestive of, like, we don't need, like, in my view, we don't need to get into the minutia of what happened. That is a big, big billboard that says fraud. And it's with huge arrows pointing to the Social Security Trust Fund that something is seriously, seriously, gigantically, fraudulently occurring. And it would be highly, highly supportive of the notion that money's being created out of thin air, off book money, that isn't tabulated into the data in terms of how much money is supposed to be in existence. It's highly supportive that that amount could be hugely bigger. And you see, I look at that, and that explains to me how, despite half of the economy being shuttered due to a pandemic, we have equity prices at record highs. It would also be a very, very good explanation as to how this naked shorting of paper metal can be run ad infinitum by a very, very small group of players on these paper exchanges, COMEX and LBMA. It would be very, very supportive of explaining, despite who sells their U.S. government debt or how much of it they sell, yields never go up. Mm-hmm. Normally, when the biggest holders of fixed income or sovereign debt, normally when the biggest holders are sellers, yields go up. The opposite happens in our world today. If Russia announces they're selling, which they did actually about 3 weeks ago, what happened in the immediate aftermath of Russia saying they were abandoning all US dollar denominated instruments? Well, the 10-year bond went from 164 to 146 in a matter of 2 days. I'm just saying, historically, normally, that would have caused a rout in the bond market of selling. You see, I worked in the bond market back in the 80s. Before the plunge protection team, otherwise known as the President's Group on Capital Markets, which was formed in the aftermath of the 1987 stock market crash, which I was actively engaged on a trading desk institutionally when that occurred. And you see, I've seen bond markets crash or crap out, which is a term it's used on trading desks. And I've seen yields back up when they should, but this doesn't work anymore. And it doesn't work. But you see, this is because people are generally inclined to believe what they're told. And I brought up the word hedonic adjustments. And what hedonic adjustments are, for your viewership, there's a chap by the name of John Williams who has a website called shadowstats.com.
Yeah, we've been privileged to have John on several times, and most recently about 2 weeks ago.
And what the essence of John Williams' work is, he chronicles how data measurement has changed. Mm-hmm. You see, in 1980, inflation was measured much differently than it is today. And the adjustments to the measuring method are referred to as hedonic adjustments. And John Williams deconstructs the inflation reporting from today, and he tells us what inflation would be today if it was measured the same way it was in 1980. And he generally has inflation pegged north of 10%. I don't know, 11 or 12 anyway. You see, so they've changed the way they measure inflation. And the upshot of the changes they've made, these hedonic adjustments, basically means that anything that goes up in price is excluded from the inflation measurement. So if you're never measuring anything that goes up in price, of course there will be no inflation, because and I guess in a broad sense, what they do there is they use substitution. If one item in their survey of prices goes up, they'll substitute that item for something that didn't go up. And I mean, it's not just the inflation numbers they've altered. They've also altered the way they measure what unemployment is. I mean, it used to be if you didn't have a job and were looking for a job, you were considered unemployed. But they've changed the way that's measured too, because now it's they have different subcategories. If you've been looking for a job and haven't found one in more than 6 months, you're basically deemed to be structurally unemployed. And if you're structurally unemployed, that doesn't count in the unemployment numbers.
Mm-hmm.
So as a result, we end up with, a reported unemployment rate in low single digits, when in reality, it might be north of 20%.
Mm-hmm.
And you see, but what we do is we just exclude the people that would make the number look big.
Mm-hmm.
And that's government trick number 1 or 2 or 3. And governments, the reason governments do this is because their entitlement programs are all linked to the inflation rate. So if unemployment benefits are due, the government, to preserve their fiscal house and to preserve their balance sheet, governments want to pay as little as possible to the people that they've promised benefits to. So if they understate inflation, the cost out of the government's pocketbook is smaller. If unemployment looks smaller than what it truly is, the dollar looks, and the American economy looks stronger than it otherwise would be viewed. And I mean, if unemployment was seen to be over 20%, that could cause enormous problems for the U.S. government and their ability to issue sovereign debt, and the willingness of foreigners to hold dollars in their reserve accounts. But I mean, these undercurrents are going on in reality, in front of our eyes, if you choose to look for them, and if you choose to listen to people who voice concerns about these things, people like John Williams, people like me, people like you, Dunnigan.
What you just talked about, inflation by policy. I will assert inflation by policy is an act of injustice. To debase the currency intentionally is an act of injustice on earners and savers and retirees. But then to lie about it and cover it up. Okay, so first the injustice of structural policy of inflation, and then, that is going to be unfair to retirees, so let's make a law that says we have to index for cost of living adjustments to to our retirement benefits and entitlements. But then let's lie about how what the real reality is and the truth is around inflation, so that we actually can get back to doing what we wanted to do in the first place, and that's being unjust to people. But at least we can deny it. It seems to me it's just layers and layers of denial.
Well, yeah, and the other big reason why they engage in this act of, let's just call it lying, because that's what it is. They want to keep the public appeased, because if the public was aware of the true state of affairs, the powers that be are very concerned and very worried that we might have something that's referred to as a pitchfork revolution, where people would rise up and people would say, no mas, we're not going to put up with this garbage anymore. So this is a big reason why. And governments are, unfortunately, in the Western world, governments have been have really sharpened their knives and have become very, very skillful at manipulating our perceptions and our view of reality. And it's done in conjunction with a very willing and a very compromised and a very conflicted mainstream media.
Yeah, it's baffling that too, because every participant in mainstream media, or most of them, probably have journalism degrees. They learned what was valid journalism. They learned about telling the truth as it is, based on original sources and original documents and everything. And it just seems like that is out the window.
Yeah, but then again, studies have come out on the Exchange Stabilization Fund, and one that comes to mind in particular, which is somewhat dated now, because this guy, after creating this piece, it was about the Exchange Stabilization Fund, and the website was marketskeptics.com. And I don't know if Market Skeptics is still a live website now or not. And I'm trying to remember the proprietor of Market Skeptics, and I used to communicate with him 11 years ago, but he's basically gone completely underground and has gone MIA. But in his expose on the Exchange Stabilization Fund, he pointed out that there were 500 prominent journalists in the mainstream, both print and in televised, that were literally on the payroll of the Exchange Stabilization Fund. Basically, intelligence. Call it the financial intelligence community. So these people are deeply conflicted. They're compromised, and they're given marching orders, and they're given instructions. And most of them are literally presenters who do not engage in any kind of investigative journalism whatsoever. They literally read whatever is put in front of them on a teleprompter, and that's what they read. And they're basically given bullet points as to what they're going to report in the print media, and that's very sad.
And it dominates the popular mindset to an extraordinary degree. And at the same time, people are watching alternative media. They have their gut instincts about what's really happening. They know, like the inflation, that thing. People know in their gut that prices, whether it's for food, for medical care, for higher education, for housing, are ramping up much faster than is being admitted. You mentioned pitchfork revolution. Our Australian economist friend John Adams, who we've had on regularly, has presented papers to the Australian Parliament about Jeffersonian and John Adams' writings and philosophies based on a history in English law of the right of the people to uphold, for the truth, and for if going for redress through the political establishment and political system is being thwarted. That brings to a head what I was mentioning earlier. Is just today, this weekend, being Independence Day in the U.S. is painful for many of us because we feel anything but freedom, anything but independent. And we think about the Declaration of Independence, which listed this list of usurpations and trespassing of rights, and asserted, people have a right to, freedom of communication and all these sort of things. And we don't feel that, we're not experiencing that. And yet many are concerned that we're rolling over, not just in the U.S., but almost globally here, and letting all these freedoms be taken away.
Yeah, Donegan, listen, and we need to look no further than the Founding Fathers themselves. The Founding Fathers of America, if they were alive today, I don't believe there's one of them that would be allowed to have a presence on social media. They would all be censured. They would all be deplatformed, and none of them would have a word to say on social media, because Facebook would have them eliminated, YouTube would have them eliminated, Twitter, Instagram. This is the kind of thinking and the kind of thought that is unallowed, and it's just absolutely, it's despicably curtailed and shuttered and shunned by our social media masters, along with the three-letter news agencies. It's very sad, and what's even worse, it feels to me anyway, Donegan, like it's all building to some sort of a head. And whether that head ends up, having some sort of a resolution in armed conflict, I don't know. Or we're ripe for disaster right now, frankly, with the misrepresentation of reality through anything that's labeled as media. And politically, the West is in shambles. I speak for my country, Canada. I speak for your country, the United States, whether it's Australia, whether it's New Zealand, whether it's Britain, whether it's France. We're all in really, really sad shape. Coincidentally, or not, all of these countries that I just named, they are all being run currently by people who are highly, highly geared and highly, highly influenced by the banking establishment.
We've got a question that mirrors what you're just talking about right now. Actually, two questions. I'll pin these both together. Sarge 27271 says, Dunnigan, is Rob still in Canada? If so, why? And as a fellow, quote, plantation dweller, I'm curious, how does he see central bank digital currencies in Canada since we have no gold reserves? That's question number one. Question number two from Matless X. What is the problem with these Anglophone/Commonwealth countries like Canada, Australia, New Zealand, the UK? Just 2 years ago, New Zealand was considered a place to, quote, bug out if SHTF. Not so much anymore.
Okay, well, I'll start off by saying, why am I still in Canada? Because I was born here. I will not travel to the United States, period. And the reason for that, Dunnigan, is I'll take my luck with the buggers I know than the buggers I don't. And I've had experiences at the U.S. border in my past. And let's just say this, and this could be a whole show. They don't play nice. They don't play nice at all, and they don't honor their own word. They're lying, thieving individuals. And they've demonstrated to me firsthand. Leadership in Canada is a disgrace, and is not what it portends to be. But then again, I had a discussion with a talking head back a few weeks ago, somebody who a lot of people would know their name. And he took me to task talking about the leader of Canada, who I have no time for, didn't vote for him. I even question whether his last name is really accurate. But let's just say I do believe he was elected. And at least in Canada, as bad as he is, I think he was elected. In your country, I know the pretendant was not elected. And that's just reality. Hate to say it. And you know what? I'm not a lone voice saying that. Everybody in the world knows that. Anybody with their head screwed on right knows that. So, but it's not really a question to me, Dunnigan, of pointing out, you're this and we're that, or we're worse than you, or you're worse than us. That's not the discussion. The discussion is we're all in bad shape. We're all in bad shape because money has been used to bribe and extort favor out of everybody and all of our institutions, and we're in bad shape. And the first part of making it better is to recognize where you are. And we're in bad shape. And something needs to be done. And I don't even know if it's going to be possible to pull this one out of the fire at this point. We have some tough sledding in front of us.
In that perspective or in that environment, some specific actions that you believe are necessary for people to take to navigate this as best we can. Sure.
Well, to navigate it, and this was also part of the last sort of volley of questions, like as it pertains to the term central bank digital currencies came up. Central bank digital currencies will never fly because central bank digital currencies will be centralized. What gives Bitcoin and Ethereum their gravitas and their traction and their growing traction, what gives them their gravitas is that they are decentralized and they adhere to blockchain protocols, which means you cannot counterfeit them and you cannot print more than a stated amount. Any centralized digital currency created by a sovereign entity will effectively be a do-over on our current fiat regime. Because if it's centralized, they can cheat and they can create more than they promised to, which is what they've really done with the fiat money. You see, they tell us there's X amount of fiat money. And as I was trying to explain, the real amount is probably 10, 20, or 30X. There will never be 10, 20, or 30 times 21 million Bitcoin in existence. The amount of Bitcoin is capped at 21 million. And blockchain protocol ensures that they can't beat it because decentralized, distributed ledger, there's a record of every Bitcoin in existence on the internet, on distributed ledgers, on computers. And it's like there's no hocus pocus. But if the Fed invents a centralized dollar coin, we will never, ever, ever know how many of those they're creating because they will control it. Nobody controls Bitcoin. Nobody controls Ethereum. Distributed ledger, blockchain protocol, decentralized. You see, if you got a problem with the dollar in the world, you can phone the Federal Reserve or the U.S. Treasury and complain, or you have someone to complain to. There's no one to complain to about Bitcoin. There is no number to phone. It's completely decentralized. And it's interesting because China said some disparaging things about Bitcoin recently, specifically relating to Bitcoin miners. And I think it was in a space of a couple of weeks. And this was something Max Kaiser talked about recently in an interview I managed to watch, I think over the weekend. The Bitcoin mining crowd literally upped their roots from China and moved to Texas in a matter of 2 weeks. You see, and if American regulators come down hard on Bitcoin miners, they'll up and move again. You see, there is no head office for Bitcoin. But if the Federal Reserve has a dollar digital currency, the head office is the Federal Reserve for that. But a distributed ledger, decentralized cryptocurrency, it's real money, and it can't be. I mean, listen, if you leave your cryptocurrencies on an exchange, the exchange can get hacked, and you could lose your coins through an exchange if you're silly enough to leave them in the hands of a third party. But as long as you keep them off chain and in a hard wallet, nobody can confiscate your Bitcoin. Nobody can confiscate your Ethereum. It's unhackable as long as you keep it away from or out of the hands of a third party. And nobody can make you give their. I mean, you end up with, you have your own wallet. You end up with keywords that you can recover your wallet as long as you know. It's a series of I have a wallet, and it's a series of 24 words. And they all have to be entered in the right order. Like it basically, so it's encrypted money, and it can't be hacked. It's just impossible. Cannot be hacked. So it's safe. Nobody can steal it from you if you manage it right. But that's not the way with fiat money. Fiat money in a bank account, governments can confiscate your bank accounts, and they can take your money, and there's really not much you can do about it. Cryptocurrencies, on the other hand, and so now I've had this little spill about cryptocurrencies, and there's people that might be saying, "Well, Rob, I thought you were a metals person." Well, I am a metals person, but I'm not a paper metals person. I'm a physical metals person. Always have been a physical metals person, and I still am a physical metals person. You see, and what's going to occur in coming days, weeks, months? We are going to see the premiums that are paid for physical metal. And Dunnigan, you would have firsthand knowledge of this. The premiums being paid for physical metal, coins and bars, it far exceeds what the paper price is suggesting. The price of an ounce of silver should be, or an ounce of gold. I expect and anticipate that those premiums will continue to widen. If you're holding physical metal, the real price of metal will not be reflective of what the COMEX or the LBMA tells us an ounce of gold or silver should be trading for. And like I say, I think those premiums will continue to grow, and metal will become harder and harder and harder to source in physical form. And that has been playing out. Mm-hmm. That's exactly what has happened in the metals markets over the last 2-3 years. And I expect more of the same. And I expect higher crypto prices too. And the reason I expect higher prices in both of those is because the amount of money that's printed next year necessarily will be bigger than the amount created this year, which is more than the amount created last year. And they're being underreported to the general public, like in spades. So this can do nothing but continue and heighten and become and let's just say this. I think that equity prices are basically priced for beyond perfection right now, and I think that they are arbitrarily, necessarily being goosed higher by the powers that be. Real estate also, I don't think there's a huge upside in real estate at all. I think there's actually significant downside. And I will admit that I've been of that mind for some time and haven't been right, because real estate prices have gone higher. But let's just say with interest rates effectively at zero and incomes not rising, the upside on real estate is minimal in my view. And the reason for that is most real estate is bought with leverage or there's mortgage. And I do believe we'll get to a point where banks will not lend to real estate, period. They will shut their books. And my view is that the downside in real estate is substantial. And if we happen to have any kind of a call in humanity, and there's different people who've spoken out about that as it relates to the pandemic and its purported remedy, we could see a substantial number of people not around in the very near future. I mean, ask British Airways or Air India or American Airlines how they're making up their pilot situation. Mm-hmm. A whole lot of them are expiring. They're all vaxxed. All of them. They're all vaxxed. And they're not showing up to work. Some of them are dying in the cockpit. And this is a class of people that don't do that. Mm-hmm. The health of pilots is the most scrutinized probably of any occupation in the world. These are healthy people. These are the healthiest among us. And they are passing away at an alarming rate. And you know what? That will hit you in the face at some point. Hopefully you're not airborne when it happens. Mm-hmm. And this is a real issue. And it's really coming home to roost.
That's one of the most glaring of many things that seem upside down, backwards, and unable to be talked about openly that we're facing. Rob, I see that we're up against the clock, and just there's many more questions that we have from our viewers than we're going to be able to field today. You've already done a in-depth dive on at least 2 or 3 major topics for us, and just wanted to make sure people know how to find you and to follow your work closely.
You can catch me on the web at kirbyanalytics.com and at fine outlets like Dunnigan's when we get the chance.
And so that you don't miss any of Rob's interviews on our channel or any of our other guests, make sure, guys, out of our 57,000 plus YouTube subscribers, there's only 2,000 who have signed up for our all free newsletter. So go to libertyandfinance.com over in the left-hand margin, put your name, email address, click submit. You'll get a confirmation email. You've got to respond to the confirmation email to opt in, and you're in. And you'll get all of our interviews with all of our guests, all the descriptions and any links that our guests provide, any resources, articles that may be mentioned, charts, whatever. So don't forget, get on the newsletter. Let's do it. Rob Kirby, proprietary analyst, founder of kirbyanalytics.com. As always, on behalf of our entire audience and myself, thank you for joining us here on Liberty and Finance.
Been my pleasure, Dunnigan.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back